Nedbank has bagged higher first-half profit. Headline earnings for the 6 months to end June increased 8%. The performance was underpinned by a 10% rise in interest and similar income and a 7% uptick in non-interest revenue and income. An interim dividend of R9.71 has been declared that reflects an 11.5% rise on the previous period's payout. CEO Jason Quinn says the operating environment during the period was challenging as economic activity remained weak due to political uncertainty, high interest rates and persistent inflation. But looking ahead, Nedbank is cautiously optimistic about the potential benefits of the Government of National Unity, and the firm expects better macroeconomic conditions in the second half and into the medium to long term. This gives the bank confidence that it will be able to achieve its return on equity target of 17% by 2025. AngloGold given its shareholders a reason to smile. The bullion producer has declared an interim dividend of 22 cents, which is 5 times higher than the previous payout, and its headline earnings surged by a similar margin after coming in at $13 million. Anglo says it saw improvements in production and total cash costs per ounce during the period, helped by a turnaround at its Brazilian operations. Afrimat says it is satisfied with the steady progress being made in respect of the Lafarge integration. The building materials and mining group bought the company recently for $6 million and is confident it can turn the ailing firm around. Afrimat says the loss-making cement component in the Lafarge business has been reduced but remains in the red for now. The company's business update also provided investors with insight into the trading conditions it's had to contend with in the first half. It's described the period as a story of 2 quarters. In the first quarter, volumes were hit by a lackluster building commodity market and issues at ArcelorMittal's Vanderbijl Park facilities, but in quarter 2, volumes increased thanks to tender activity for road, rail and small infrastructure projects. The group has, however, warned that the pickup in the second quarter wasn't enough to offset the volume decline in the first quarter. Afrimat will publish a trading statement in September when it has greater certainty on how this has affected the company's financial position. Hulamin has warned of a profit hit. The aluminium supplier says first half headline earnings per share will be between 13 and 21% lower. That's due to softer global markets, which weighed on exports, particularly in the first quarter. A fire at the group's operations also negatively impacted exports. The firm will open its books on the 19th of August. The Reserve Bank's Prudential Authority has fined Sasfin nearly R210 million for breaching South Africa's foreign exchange laws. R49 million of that has been suspended. And so the financial services provider will have to pay the fiscus R160 million. This comes as the group is also trying to fend off a civil summons from SARS for a staggering R4.9 billion plus interest and costs. The claim stems from SARS' alleged inability to collect taxes and penalties from former foreign exchange clients of the bank who were involved in a criminal syndicate that colluded with some of the bank's employees to expatriate money illegally. Sasfin is in the process of delisting from the JSE. Shell and BP will pay around R286 million to the Central Energy Fund for operational costs at Sasfin refinery. This comes as the oil firms are looking to sell the refinery to the state-run fund. Sasfin hasn't been operational since 2022, when joint venture partners Shell and BP halted operations, but the CEF is looking to buy the asset as government plans to secure security of petroleum supplies amid declining refinery capacity. The payment commitment from Shell and BP could help kickstart the revival of the refinery, which since its closure has suffered damage caused by flooding. Treasury has approved the provision of a guarantee to Transnet. This is part of a condition for the state-owned logistics firm to secure an R18.5 billion loan from the African Development Bank. Speaking to Business Day on the sidelines of a 3-day ANC Lekgotla, Finance Minister Enoch Godongwana described the situation as being stuck between a rock and a hard place. He stated that Treasury had two options, either provide the guarantee or supply Transnet with cash. Godongwana says if he had refused the guarantee, Treasury would have eventually had to give the company the funding it would need for its recovery plans. And so he opted for the guarantee, which is a deviation from the Treasury's tough love approach to errant state-owned enterprises as it ramps up its fiscal consolidation agenda with the aim of reining in public debt. And more than $6 trillion has been wiped from global stock markets in 3 weeks. However, after yesterday's sell-off, Asian markets seem to have rebounded. Here's our reporter, Anatindevu, with more.
And that's right, Ndawleng. We've seen over $6 trillion lost from global markets in just 3 weeks. However, like you mentioned there, Asian markets have seemingly shown resilience since that trade rebounding after Monday's sell-off. Joining us with more on what we can expect from the European markets on the back of this is DW's correspondent Chiponda Chimbelu, who is currently standing by in Berlin. Chiponda, thank you so much for your time. What is the latest?
Thanks for having me. Well, it appears that we may start seeing a lot of volatility in markets. Japanese stocks were the biggest losers in Monday trading. Today, they have made the biggest gains in more than a decade. They closed more than 10% higher. That, of course, comes after their biggest fall since 1987 on Monday. Now, yesterday's market sell-off began last week, Friday, with European markets and Wall Street tumbling after disappointing U.S. jobs data. There are fears that the U.S. central bank may have waited too long to cut interest rates. And what we are seeing in Asian and U.S. markets in particular is a lot of gyration. And that may also have much to do with the fact that Wall Street in particular has been trading at record levels in recent months. But the losses are less pronounced here in Europe. And we saw that even in Monday trading. The pan-European stocks, 600, fell 2.17% after Japan's Nikkei closed more than 12% down.
And Chiponda, we of course saw market fluctuations like you mentioned there as a result of this uncertainty. So what is the outlook sentiment?
Well, despite the most recent market rout having been triggered by disappointing U.S. jobs data, there is a view that this is a market correction, and the recent sell-off isn't a sign that a recession is in sight. Now, what we are seeing on markets is essentially investors dumping stocks that they believe are overvalued. And it's worth pointing out that tech stocks especially have had the biggest losses. The Magnificent Seven stocks, which include Apple, Amazon, and Nvidia, shed more than $600 billion during the sell-off on Monday. A report released Saturday showed that Warren Buffett's Berkshire Hathaway cut its stake in Apple by nearly 50%, and Nvidia CEO Jensen Huang sold more than $300 million of that company's stock in July before the share price tumbled. So a lot of what we are seeing is investors dumping overvalued stocks, and it has been mainly those that have been riding on the prospect of an artificial intelligence boom. So tech and semiconductor stocks.
Chiponda, of course, you make mention there of those tech stocks. So give us more insight into the U.S. economy's role.
Well, despite the latest sell-off after the disappointing U.S. jobs report, the world's biggest economy appears to be in good shape. Retail is robust and the service sector is growing. And it's worth considering that markets have risen significantly this year. And this is why some say this may be a correction. Now, of course, there are some fears that the latest jobs and unemployment figures may be a sign that the U.S. economy is cooling faster than was thought. But whether that puts it on a path to recession is a whole other question. So far, the Biden administration has not spoken about the recent market panic. And of course, while some commentators have suggested that the U.S. Fed could intervene with an emergency interest rate cut, that is, of course, highly unlikely. Some experts warn that such a move would also add more weight to fears about a potential recession. So it wouldn't help reassure investors.
Chiponda, let's leave it there for now. Thank you so much for those updates. That was Deutsche Welle's Chiponda Chimbelu.